the key there, on top of actually getting the engagement letter, is that you make sure you don't have either engagement creep or, as I like to say, decreep. If you're providing, if you have a review engagement letter, make sure that you do not provide any auditing type services while you're at the client's, or that you only provide compilation type services within the engagement letter. And that's another reason why you probably need to review the engagement letter every year. Is, normally with a relationship of a client that may start off with just a compilation or a review engagement, the client may need additional services, and you may start doing those, and you might not update that engagement letter for those. So you just want to make sure that while you're in the field, you complete your prior year audit or review or compilation or tax preparation. If you're doing tax services and the client starts asking you a lot about, helping out with investments, again, that's just something that you want to make sure you update every year. So you want to avoid engagement creep or decreep. If you're providing review services, make sure the only thing that you're doing while you're in the field are actual review type test work. If you're doing review services, you may actually go look at bank accounts. You may pull and you may review bank statements and cancel checks. Well, that's great, but if you're only providing a compilation, that's the last thing you want to do, because then if there's a defalcation or you fail to detect defalcation, your client is going to say, well, I gave him all the bank accounts, and he went through and he looked at all these canceled checks. And you're going to have to say, well, yeah, I did, but I was only doing a compilation. Well, it doesn't matter. If you had an engagement letter for a compilation and you were doing review type work, it's going to come back to bite you. Yeah, I think with tax services, the key areas there nowadays especially is just reportable income and also the foreign bank account information. You want to have that in every single engagement letter that you have. I know there was a fairly big court case that's going on currently that has a pretty high-profile political person who is in quite a bit of trouble for not reporting foreign accounts. His accountant said that they asked him for that information, but it wasn't delivered. So, you have a he said in this case situation, and you don't know who to believe. So, just to cover yourself, you want to make sure you've got as much in that engagement letter as possible for all types of income. Make sure it's all in there, that the client asserts that they've reported everything to you, foreign accounts. And then in all engagement letters, we really recommend that you throw in the subpoena coverage clause. So if you're doing a tax engagement and your client is later sued for some sort of civil issue that you're not involved with, it's just not fair that you have to provide and pay for all the costs to respond to a subpoena, the copying cost, and you may even have to hire an attorney to sit with you to go through the subpoena records. And then you want to make sure there too that the conflict of interest are all resolved before you're doing any tax work, especially if there's a potential divorce situation, that you've got that straightened out, or even if there is a business issue where you might be doing a partnership tax return and the two partners are in litigation. If a situation like that, I would really get my radar up and tighten down my tax engagement letter a lot more. And here again, one of the largest claims that we've had to date was our firm finished up a tax return, and on the way out the door, the client asked them about a possible 1031 exchange, and our member off the cuff just right away gave him his quick down and dirty opinion, and later on that eventually blew up, and we wound up spending over $2 million to settle the claim. Just when a client asks you something like that, you really need to think about it a little more. Tell the client that you would like to think about it, and you probably will send them a new engagement letter just for those services, so that you've got all your bases covered. it gets back to what I previously said about the first thing you want to do is make sure you obtain an engagement letter for each and every engagement. And so something like that, when a client comes in, maybe does the 1040 and then starts talking about next year's or starts talking about investment services, here again, that's just a business opportunity. You could certainly give them a new engagement letter outlining what you're going to charge for those services and exactly what those services are going to be. So you just don't want the tax services or the or the investment services, 1031 exchange advice, any type of recommendation like that that's outside the scope of a normal tax engagement to bleed into that same engagement letter without expanding what your role is.